Arvind, are you surprised by the with the RBI's decision to hold rates constant? Because markets really had factored in a 25 basis point cut. So what is your reaction?
I actually think it's absolutely a bold and brilliant call by the Reserve Bank of India and the Monetary Policy Committee to hold rates.
But earlier, Arvind, you were always a bit of a skeptic, if I put it that way, of the entire focus on inflation targeting in an economy as complex as India, where the RBI is a full-service central bank. So does it seem as if the MPC has put excessive focus on inflation control at a time when the focus should have shifted to growth? Because the mandate was price stability, keeping in mind the objective of growth. Have they forgotten the latter part of the mandate?
See, first of all, remember that this is quite an unusual situation for the RBI, right? We've had a major monetary event in our country, and that has led to a lot of questions about the future course of growth and inflation. That's one. Second, also it comes at a time of tremendous international volatility with global interest rates going up, capital flows from emerging markets declining, and therefore lots of pressures on the currency. So in a sense, you have to understand the context for this decision, that there was a major event creating a lot of uncertainty domestically and international developments, and therefore I think that this is a call to try and signal stability, continuity at a time of rapid uncertainty and volatility.
But Arvind, given the fact that markets had already kind of factored in the rate cut and bond yields had fallen very dramatically, in fact, close to 70 basis points post the demonetization almost. So does it seem as the RBI is completely out of kilter with the markets? We've already seen bond yields reverse very dramatically from 6.2, barely 6.2 before the policy announcement to over 6.31 now. So is that kind of volatility desirable? Shouldn't the RBI as an intelligent central bank take its cues from the market, even if it does look as if it's following the market, whereas it should be leading the market?
Well, I don't put a lot of store necessarily by here, in this case, by, you can't say markets want it, therefore you should deliver. I mean, remember that you have to understand this call also in terms of whether you think these, whatever effects of demonetization are going to be, or whether they're going to be transient or permanent, right? If you think they're going to be more permanent, then it calls for a particular policy response. But if you think it's going to be transient, you want to see through that and take into account broader factors that I mentioned, the need to stabilize markets at a time of considerable uncertainty domestically and internationally. I mean, there will, after all, when we get to know, when the data comes in a month or two, for example, about how transient even the liquidity flows are, how much is coming in and how much is going out, I think that would be the time to take a more careful call on how monetary policy should be assessed. Remember also that put yourself, the dilemma for a central bank that on the one hand has had to tighten because of excessive liquidity flows into the banking system, and also has had to intervene because of volatility in foreign exchange markets. I mean, it creates a real kind of dilemma and communication problem when you say, we've raised CRR, we're going to use MSS, we may have to intervene in foreign exchange markets, and then you cut policy rates. So, you have to think about the overall context and not get wedded to this, narrow, whatever it's inflation, whatever that you were saying. It's in fact, I would say that one of the more difficult calls for the RBI, because the situation is so unusual, and I think they did make a really bold and brilliant call.
Oh, well, absolutely. I think almost everybody's sympathies would be with the governor and the MPC. But having said that, central bank governors are in a tight spot because markets always expect them to be wiser than everybody else. So this is why I come to my next question, which was the general issue was, did the Reserve Bank of India's central board really think through the consequences of what they were suggesting? Because after all, prima facie, it was recommended by the central board of the Reserve Bank of India as is required under the law. But we have a central board which is virtually a lame duck. We have as many as close to 10 vacancies amongst the independent directors. At the same time, given the kind of fallout that we have seen, there does seem to have been lack of thought. Given the kind of disruption that we've seen in economic activity, could the central bank really have taken a decision so quickly? Does the whole thing not quite gel, Arvind?
I think now we're going from monetary policy to other issues, and in terms of who did what when, these are questions that I think it's difficult for me to second guess what happened. So, I think that whatever has happened has happened. But in terms of today's decision, I'm really pleased that they made exactly the right decision.
One more question, Arvind, on the issue of the GDP, impact on GDP. We heard Michael Patra say that they expect the demonetization impact to be only 15 basis points, and whatever negative impact was there is already there in the second quarter. The reduction that they have in the GVA to 7.1, he says that's largely because of the second quarter numbers. But the second quarter really did not feel the impact of demonetization. And what we've seen is successive brokerages have cut their estimates by a much more aggressive number. So would you go along with that number of just 15 basis points reduction of the third quarter GVA?
We are looking at all the data now. We're looking at all the high-frequency data. There's a lot of uncertainty, mixed signals, and I still don't think we have the first, macro read on the impact of demonetization. So we're going to be looking at those numbers, and once we make a considered assessment, then we'll come back and talk about that. Yeah.
Absolutely. We are in uncharted waters. Very difficult to really take a call. But one last question, Arvind, if I may. This is on the issue of what is the impact as far as profits of the Reserve Bank of India are concerned in case there is some amount of money that does not get returned to the banks. And here the governor was very categorical that it does not impact the RBI's balance sheet. But he also added the caveat, and he repeatedly said this, as of now. Yep. Now, what does this as of now mean? Is there a question of subsequently the legal tender status? Right now, all that has been done is the legal tender status has been taken away. But he was very clear that to repeat, as of now. What does this as of now mean? Is the government thinking of doing something beyond taking away the legal tender status, which would impact the balance sheet of the Reserve Bank of India?
I'm not an expert on the legal situation here. I think that these are all decisions we have to make when the data come in finally. So I think those calls will be made later. I don't know exactly what the legal status is, and the RBI governor knows more than that. But in terms of going forward, what the government is likely to do, I think we'll take a call when the data come in and when we see what has happened. Take an overall assessment of what's happened with demonetization.
Dr. Subramanian, this is Supriya Srinath. I'm joining in from the RBI headquarters. Just attended the press conference by Dr. Urjit Patel. I have a question for you, and he very categorically said when he was questioned on demonetization that 11.5 lakh crore rupees have already made its way back to the system, and he said it is going to enhance security, move towards digitization. I mean, I'm going to ask you a very blunt question. Is that reason enough to demonetize, to enhance digitization and to have enhanced security of our currency? It had to serve a larger purpose, and if a lot of money makes its way back to the system, it looks like it will. Was this exercise in futility then?
I think that one has to assess demonetization in its overall context, and that's what we're in the process of doing at the moment. As I told Maitli, we are going to be looking at all the data, the high-frequency data, get our first macro read, and then, provide a more considered assessment, in the days and weeks to come.
Dr. Subramanian, the growth forecast by the RBI has been lowered from 7.6 to 7.1%. A large part of that lowering of growth, according to the RBI, is on account of Q2 GDP figures. Some part of it is on account of demonetization, which they believe is transitory. Is North Block as optimistic about the impact of demonetization being transitory, or do you actually see that data point being lowered as much as RBI has done so, and perhaps a lot more?
Yeah, because there are a lot of mixed signals coming. We have to wait assess the data. We still don't have a proper macro read, even the first macro read of what's going on. Once we have those data, we'll analyze them very carefully and come back with a more considered assessment, in the days and weeks ahead. At the moment, it's not very easy to make a really definitive call on the magnitudes of all these impacts.
A definitive call may not be possible, Dr. Subramanian, but you and I both know that there has been a demand destruction. There will be a growth collapse. In that scenario, did RBI err too much on the side of caution by not cutting policy rates? Shouldn't they have committed to a lower rate regime?
No, see, there I am absolutely sure, and confident that they made exactly the right call. And remember, exactly because of all the expectation and perhaps even market pressure to lower interest rates, I think this was actually a bold and brilliant call. For 3 or 4 reasons. Let me go through those reasons very carefully with you again. First, we've had a lot of uncertainty from the demonetization, so there is inherent more volatility and uncertainty in markets, and therefore this is a time to stabilize and convey a picture of stability and continuity. Second, you've seen in the last 2-3 weeks after the U.S. elections, bond rates have gone up all over the world, and India has been almost the only country where bond rates have come down. As a result of this, there's been extra pressure, a lot of pressure on the rupee, a lot of volatility. And so in this stage, we want to, contain that liquidity, and therefore, I think that's another reason why this is a good call. Third, we don't know whether for sure how much of the effects are going to be transient and how much are going to be permanent, and monetary policy should not respond to, transient changes. Finally, think of the communication dilemma for the RBI. On the one hand, they've had to raise CRR. On the one hand, they've also had to intervene in foreign exchange markets because of volatility. Both of these are contractionary in nature. So they've been doing that. Now, if you say, well, they have to cut rates, then the signaling problem becomes so difficult because you're both contracting and easing, and this is therefore not an easy situation to an easy call to make and an easy call to communicate. And therefore, I think if you wanted clarity of policy and communication, I think this is very consistent with what they have been doing recently. So I think that overall, if you look at all these factors, and remember, in a month or two, we will get to know how much of the liquidity is permanent, how much will flow back, how much of the growth effects are going to be permanent as opposed to temporary, and then they can always take a call on which way monetary policy should head in the face of new data.
So do you expect inter-policy action between this policy and the next? Do you expect inter-policy action by the RBI?
It's a question that nobody can answer anymore. It's not a question that I can answer or will answer. It's not an easy question.
The only reason why I asked you that question, Dr. Subramanian, is because people in New Delhi, and especially people within the government, have said that RBI should have cut rates radically. Here we have a situation where RBI wants to communicate that it doesn't want to contract and expand it at the same time, and so has decided not to cut rates. Will this disappoint political masters in New Delhi? I'm asking you a controversial question, but nonetheless, you're an economist of our times, and we must ask you that question before we let you go.
See, I think that because it's absolutely the right decision economically, I think that, it should be seen that this is in the best interest of the country at this stage. So I think that's the way to view this action by the Monetary Policy Committee.
All right. On that note, Dr. Arvind Subramanian, we really thank you for taking time out this afternoon and speaking to us at ET Now as we discuss and debate the RBI policy action, post-demonetization, no rate cut, and we have one of the most influential voices from New Delhi joining us to assess all of that. A big vote of confidence coming in from India's Chief Economic Advisor Arvind Subramanian on what the RBI governor has decided to do today.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.